Let's talk about a straddle. Now with a straddle, you use this when you have a view that the market is either going to go up or go down. You're just not sure which way. So let's think of an example. Well, one that I can think of is when the UK had a referendum to leave Europe. And it was always going to be 50-50 or pretty close, but you knew that if the market went well and the UK stayed within Europe, that the pound would go from 155 to 165, 170. So £1 at the time got you 155 and you felt it would become stronger. But if the UK decided to leave, which is what happened, the pound would drop. So a pound, instead of you getting $1.55, would now only get you $1.30. So this is where you do a straddle. You buy two options. You buy a call option. You pay a premium, and if sterling gets stronger, you get a payoff. And you buy a put option. So if sterling gets weaker, you get a payoff. Now the strike or the exercise price is normally at the same level at the money forward, which is what we think the price should be on that given day. So you have a payoff diagram that looks like a V shape where you have the upside of the call option and the upside of the put option. But remember, you're buying two options, which makes it pretty expensive, especially if volatility is high. And you better make sure that the market moves far enough one way or the other so that you break even and you recover what you spent. Now on the other side of the coin, if you think the market will stay within a range and not do a lot, and volatility is high, you might be tempted to sell or go short a straddle, in which case you sell a put and you sell a call. So if the market doesn't move much either way, neither the put nor the call are being exercised, which means you keep the money from those two options. But just remember, if you write a call or sell a call, it means the same thing. You have a potentially unlimited downside if you've got it wrong. Also, make sure if you're a corporate or a financial institution that you're allowed to sell options for what's really purely speculative purposes.